Did you say we're live? Okay, I just want to welcome the people on Zoom. We are doing introductions for the live audience, and then we will do housekeeping for everyone. So,
my name is Lindsay Takamoto. I do the accounting for Greater Opportunities. Our executive director is here, so she could explain more about all that.
Super, thank you.
This is the executive director for Greater Opportunities. We're a nonprofit for people with developmental disabilities. We have 4 different programs: ILS, which is Independent Living Services, Supported Living Services, a day program, and Cortez, which is a part, we have in Sunnyvale, that is for transition living.
Super.
I'm Alex Barber. I'm the office manager for Greater Opportunities for HR.
And I'm Carrie Stanton, also with Greater Opportunities Accounting.
My name is Johnny Durant. I'm a Peninsula Volunteer, so I'm the HR director there. We cater to seniors. We have a senior center, we have nutrition services, and we have adult daycare.
Let's go right here.
Yeah, my name is Neha. I'm from the Center of Stanford Community. This is a small play school for Stanford Community, which is from 2 months to 5 years old.
Oh, super.
And I'm accounted there. That's great.
My name is April. I'm with Silicon Valley Living Center, and I'm the finance and operations there. And we help people with disabilities and seniors with functional limitations become more independent. So our biggest program is housing assistance. We also help the veterans. We work with the homeless population. We also help you stay in your home so that you don't lose your home. We rental assistance, staff deposits, clothing, set up. We also have a program called CPP, work with the skilled nursing facilities to help you get out of the facilities into your own place. So you don't have to make use.
Great. Did you say 15 or 50?
50.
Woo, that's.
Danny, I'm the director of HR operations for Habitat for Humanity in San Francisco, which encompasses, San Francisco, Peninsula, and Marina.
We did a fundraiser, a volunteer work with you. We built playhouses 2 different times.
Everyone is welcome.
Yes.
It's great to
I'm Megan Eagleton, I'm Director of People Operations for Peninsula Healthcare Connection. We run a no barrier clinic in Palo Alto, primarily focusing on the unhoused or at-risk of being unhoused populations. We also have a social service program where we work with the county's Office of Supportive Housing for clients. We have social workers and case managers that'll help at hospitals.
My name is John Castillo. I oversee human resources for Goodwill Silicon Valley. We handle a lot of retail locations for Goodwill in Santa Clara County, but those also fund our programs that help reentry folks, unhoused, neurodiverse, and veterans.
Well, my name is Nina Nguyen. I'm the HR manager for the YWCA in Silicon Valley. We provide direct services for all of the survivors that are we have being sexual assault. Yeah. My name is I'm also from the Valley, and I am the HR.
Hi everybody, my name is Jennifer. I'm the HR. I think I started the VP of Administration for San Jose Conservation Board in school. So we're a job training program that provides you with education and job training from 2027, and we provide you other services.
Congratulations.
Yeah. My name is Jessica, and I'm the lead director for SA Conservation Board.
Hi, my name is Irma Sop, and I'm with Thrive Alliance. I'm the operations officer, and Thrive Alliance is the alliance of nonprofits in San Antonio. So we support them in capacity building, policy and advocacy, and community resilience. Good to be here. Yeah. Hi, everyone. So remember the rock stars,
Right? You stole my line.
My name is Pastor Taha, and I'm the director of HR and Accounting at Starting Arts. We serve over 60 schools across the Bay Area, work before and training after school, teaching all of the arts, music, dance,
here and visualize.
Hi, good morning. My name is Izumi Nesto, and I'm the Chief Happiness Officer.
And executive director.
Of Life Oak Adult Day Services. We cater to older adults, 60 plus. Who have mild and mid cognitive impairment, and we offer daycare services. Hi everyone, I'm Mary Beth Sandoval. I'm from Taylor Lodge Incorporated. It's a nonprofit that works in San Diego County with severely mentally ill adults. And we have 3 houses and apartment buildings, which was Carol's ranch that we do actually retreat centers. We have 2 outreach teams and embedded case management services. So I'm the new CEO as of July 1st. I was in operations for 32 years prior to that. So
Rockstar's perfect summary. Thank you all so much. It's amazing all the work you're doing, and it's so fun to be here where we live, and like I have connections with so many of these nonprofits. So thank you. Real quick again, because we have Zoom, I think I need to stand here. I'm not used to staying in one place, but just a quick introduction. My name is Heidi Posada again. I've been with 501c Services for just over 15 years. Before coming here, I worked for YMCA of Silicon Valley. So some of you may have experience with their programs, as well as the American Cancer Society California division. So I love now that I'm here, I've gone from helping nonprofits at the local level to being able to help at a national level, helping nonprofits save money, save time. So hopefully all the amazing work that you're all talking about, hopefully we're freeing up some time, allowing you the time and saving you some money to do all these amazing things you've talked about. Before I go too far, I do want to introduce some of the folks in the room that helped set up, that are on our team. First, Candy in the back. She's filling in for the person that normally does our events who escaped to Hawaii. So if you've gotten emails from Janessa, she, a lot of you probably have talked to her on the phone or gotten messages from her. She is in Hawaii watching her father in a pickleball tournament and I think doing lots of other fun stuff. So, but she'll probably be following up with you after this event. So we're super excited to have Candy here helping us out with registration, and she helped us set this whole room up. So we got here this morning with an empty room, and she helped us. In her real job, she helps with our members in the finance department. So some of you might get to talk to her about deposits and other fun stuff that we do at our company. Beth Nguyen, she works with all of our California members. California is our state with the highest number of members, 350 members here in California, and Beth is the person that works with almost all of you if you're a customer. So thank you, Beth, for coming. She came because she saw a lot of our members and wanted to come meet you face to face. And Gary will be speaking later. I'll do a little bit of an introduction when he gets up. And then Evan is in the tech room. He is the one that was tapped to get us live on Zoom. So we're happy he's able to let about 50 more people throughout the area join us on Zoom today. For the people here, just some quick housekeeping. I think you've all found it, but the bathroom is right here. If you have to go during the presentation and you're a little shy, there is another bathroom upstairs, so to help yourself. You can also, during the break or afterwards, feel free to go upstairs and check it out. It's kind of a cool old house here. Oh, cool. Oh, thank you, Candy. She's our superstar. Food, I think you've also all found the food. Orange juice, water has also been delivered. So if you need to replenish, help yourself. Certification credits, if you need those, we'll be handing those out at the end. If you're on Zoom, we will be emailing those to you. So everybody that is here for the certification credits, make sure you grab those on your way out. Handouts and presentation. I always like to go over what you've got in your packet. So first of all, we do have a copy of this presentation. Unfortunately, we don't have the Littler presentation, but the one that we're going to do first, the that Gary and I are doing is in your packet. And then just some handouts about the company. We also want to make sure if you're a customer that you know all the services we have. So if you have any questions afterwards about our services, please let us know. And then also an evaluation form. This really helps us for future events and let us know how we're doing. I always like to talk about our tchotchkes. We've got, I think you all noticed the jumbo pen. It's a favorite at the conferences we go to. So yeah, if someone takes it from your desk, you're gonna know. And stress, I can tell it's gonna be a good morning. We've got a good crowd, good people here. Our little yellow dudes, we were very creative when we name things, little yellow dude. Our stress ball, and when you squeeze them, his eyes pop out. So this is an extra special. I know you're gonna all have brag when you go back to the office about your swag. And then last but not least, and sorry, Zoom people, we should have done this first. We do have, as Gary already stole my punchline earlier, it's not a coaster, it is a wireless phone charger, but it does have to be plugged into the wire. Anyway, it is a phone charger. Yeah, it's a phone charger. I have such a huge case, it doesn't work for me, so it is a coaster at my house. But let's see what else we've got. For the Zoom audience, I do want to say we will do our absolute best to answer any questions as they come up. We will be emailing you Shroom and HRCI credits for the questions on Zoom. The chat box is off, but the Q&A is on. Okay, so we're going to go ahead and do our presentation. So first of all, again, welcome. Did we stay on track with well, we did pretty good. So welcome. So the first presentation Gary and I are going to do specifically about managing unemployment. And then we'll have a brief break. We can replenish food, use the restrooms for about 10 minutes. And then we're going to talk about, Littler is here to do a presentation about unemployment law. Or I'm sorry, California employment law. You can see what I always talk about. So we'll do those introductions in a moment. So quick, before I get too far along, if you have a star on your name tag, that we just pick stars arbitrarily, but if you have a star, can you just raise your hand just so I know who our current customer? Oh, wow. We have a lot of customers here today. It's super. So glad you're all here and able to make it. So right now, just as you're listening to this, by being a customer, that means you're already reimbursing. So just kind of keep that in mind. Some people aren't always sure if they're reimbursing, but all of our customers have already elected to reimburse for their unemployment. This will make sense as I talk more. But I'd like to start with a little history of unemployment. Unemployment started during the Great Depression. It was obviously triggered because of everybody's loss of job by no fault of their own. It's here to replace lost wages. Oh, I've got different slides. Sorry. From 1930 to 1972. So from the Great Depression until 1972, 501c3s did not pay unemployment. So that was super great. If all that money is going to the mission that you're doing, and that was the idea. Is the turnover was low. 1972, there was a whole lot of employees that were still being laid off. The nonprofit sector had grown significantly. So part of the Social Security Act of 1972 changed the law so nonprofits participated in unemployment, which was, bummer if you're that finance person or that fundraiser, and now you've got another expense, more money you have to raise to cover your expenses. But it was a great safety net for your employees. And Congress did something really unique, and they said, you can have the state unemployment is the default, but you also had the option to reimburse. So I'm going to talk a little bit about both options for managing unemployment. In California, so not unemployment, it has federal oversight, but very minimum. every state has an option to set their taxable wages, set how they calculate tax rates. So does anybody here have staff in multiple states? Wow. Okay, one. That's amazing. I guess when we're up in Portland, everybody has staff in both states and everywhere else. So, so that's great. So everything here will apply to all of your staff. So, so here in California, we have, I know everybody talks about how we're a high tax state. We actually have the lowest taxable wages of any state in the country. I have a feeling that's going to change one day, but right now we do have really low taxable wages at $7,000. Maximum weekly benefit here in California is also fairly low. So if you're reimbursing, that's good for us right now. Unfortunately, if you're unemployed, that's not a whole lot, but you get $450 for maximum weekly benefit. And the tax rates range from 1.5 to 6.2%. California also has a really high improper payment rate, which means here in California, the state, how many of you have tried to contact EDD in the last 6 months? It's not fun, is it? We try and do it on your behalf if you're one of our customers. But they're making a lot of mistakes. And if you're not monitoring your claims on a regular basis, you'll have to pay for those mistakes. So just be aware of that, check how much your people are getting paid and make sure that it's the accurate amount. We do that on your behalf if you're one of our customers. So those mistakes that they've made translates to over $3 billion in overpayments that employers are paying just here in California. So that adds up real fast. So the merit bid, I've already talked about. You get a tax rate, you've got the taxable wages. The tax rate is based on your experience. So if you are currently paying paying kind of the default, the state unemployment insurance, you do want to make sure that you're managing your claims, auditing your claims, because you want to keep that tax rate as low as possible. And then the reimbursing option, that's the unique option that we're here to talk about. That I'm here to talk about, then Gary's going to take a deep dive in unemployment in general. But what it means to reimburse, it means you no longer have to pay the taxes. Your tax rate in California becomes 0%. And you only pay for claims that you have. So if you are an organization with historically low unemployment claims, this is a really good option to consider. Here in California, the reason why we're here on a brisk January morning is because California has a unique opt-out. We have until March 31st to change for an effective date of January 1. Does that make sense? No, but that's how California does it. So you have this whole quarter. So I talked about those low taxable wages, that's $7,000. Most organizations that have, especially if you have primarily full-time staff, you're paying almost all of your taxes in Q1. If you have part-time or seasonal or have a lot of hires throughout the year, you'll pay more. But if you're mostly full-time, you're paying your whole taxes this year. So it's a really good time to look into reimbursing. Can you save money? What are you paying in taxes? And how can you save money? The only thing that changes is that tax rate. So you're going to go, maybe that 4% tax rate to 0. The state's still going to calculate weekly benefit amount. The state's still going to pay your former employees. You still have the option to protest claims. The only thing that changes is that tax rate and how you're billed each quarter. Any questions? Super. Okay. You're saving all your questions for Gary. I like it. So basically, the general benefit, the biggest benefit is it saves you money. And that is really why back in 1972, this was given to you as an option. At least our belief is that Congress didn't want nonprofits overpaying. And so they give you the option to reimburse. It avoids any, tax hikes if California does eventually ever change those taxable wages, or if you have one bad year of claims, it can stick with you for 5 years with the tax rate calculation. And for those of you that are out there raising money, telling donors what you're doing with your money, it just helps you be a better steward of donor dollars. So very quickly, I think I'm doing okay on time. A little bit about 501c services. Again, I said we travel around the country. We do this all over, but we are based right here in San Jose. Super happy to be in our own neighborhood today. We were founded by a gentleman named John Huckstead, who was at the time an executive director of a United Cerebral Palsy here in San Jose. He was looking for options, ways to save his organization money. He came across the reimbursing option. He started, started talking to colleagues in the nonprofit sector here in San Jose. Nobody was taking advantage of the savings. So he collected about 25, went to the United Way, Association of United Way Nonprofits, worked with those executive directors and launched what is, with 25 nonprofits, then launched what is now 501c services, which is serving, we've grown from those 25 nonprofits to in various capacities, helping over 3,000 nonprofits nationwide. We like to talk about this. John sold the company back to us in 2016. So we are an employee-owned company, which what I really, truly, being in development, I know that when I hand you off to our member services, to Beth and to Gary, you're going to get outstanding service. We are all very committed. We've been here a long time. We're very passionate about helping nonprofits and serving our community. How we help, I'm going to go through this real quickly. If you have any questions at the end, or between during the break or at the end, I'm here. Gary's here. Beth's here. You've got a lot of people that can answer questions about our services, but I want to make sure that we have time for Gary's full presentation. So, as a member of 501c services, you do benefit from claims management. I hope all of you that are our customers are familiar with your Thomas and Company rep and work with them. You also have access to HR services. So for all of our customers, I hope you know about this too. You have unlimited access to HR consultation. We have about 60 to 70 trainings per year. So in addition to the in-person trainings that we do webinars. Most of them are HRCI and SHRM accreditation. All placement services, if you ever find yourself in a position where you have to lay someone off or even a team. I know when I worked at the Y, we had to do it a few times. American Cancer Society, we had a big one. So this is an opportunity for you to contact us. You actually work with Gary on it to get outplacement services. The benefit, if you're reimbursing, $450 can add up. So if you can reduce those weekly benefit amounts by having, that's our selfish reason. We want to save you money, but it's also really nice to know that you're giving those employees a little safety net as they're as they exit to help them find a job. Our program shows that on average they find work about 4 weeks faster when they use it. So here in California, that's about $1,800 savings to you, but also peace of mind knowing that you're helping those employees. We also offer stop loss protection and savings. So if you hear us talking about deposits or 501c agencies, trust, or different things like that, each one of our members holds a savings account in the trust to help them manage the highs and lows of unemployment. So if you're either interested in our services or currently using our services and you have more questions, again, we're here to answer them. Yep.
Go back to the
Sure.
slide and talk a little bit about what you mean by protection.
Yes, it's the stop loss protection. So most of our customers take it. Some of them do opt out of it, but it is an option. It's for catastrophic claims. So if there was an event, I go back to my YMCA days. If you had to close a whole YMCA branch down, like it's for catastrophic claims to help you manage through that. Yep. And I know a couple of you did bring evaluation forms. I can take a quick look at them today and see if it's worth pursuing in a deeper fashion. And schedule a meeting, a follow-up meeting. So if you are not currently using our services and you're interested, or if you're on Zoom, 4 quarters of 941s and 1 to 3 years of tax rate notices help us do that. Any questions before I hand it off? Nothing over there? No Zoom questions? Okay, well, this is my favorite time of year to introduce Gary because we actually agree on Warriors. Every other sport, not so much. Every other sport, he hates the Bay Area. So you know who you like here. He's the one person that's excited about the Super Bowl potentials. I
Already have to talk about fun employment, and then she also does.
I know if we were in Dallas, people would like him a little. No. I had the pleasure working with Gary for 15 years. He started at 501 in the development office, and now he is the head of our member services. So we're super excited to have him here. I get jealous every summer because he gets to go to the Lake Tahoe golf tournament and schmooze with all the golfers up there. And Jack Wagner was one of his favorite people. I mean, so
General Hospital fan.
he's a General Hospital guy. His mom taught him right. And he lives in Stockton, so we're happy that he can be here with his soon-to-be wife and their daughter, who's about to graduate from high school.
Wow.
So yes, you're in good hands with Gary, and I look forward to talking with any of you that wants to talk after this.
Well, thanks, Heidi. Hello, everyone. So now we're going to get into the fun topic of unemployment and documentation in the HR field and the best way to kind of beat the claim before it happens and so forth. Like I said, fun stuff. Feel free to ask any questions as we go along. And hopefully I can address those now. Worst case, have to shoot you a note later with an answer, but hopefully I can answer whatever you have going on now. We're going to talk about chargeability and liability, meaning who's going to pay for the claim and how much the claim could potentially cost. The types of separations and how the state puts them into these buckets of whether it's a lack of work or a discharge, and you'll see what I'm speaking about there as we go through. And then Heidi touched on the options already. Kind of, you have the reimbursing option or paying the taxes. So first we have the eligibility requirements. In order to collect unemployment benefits, an individual must pretty much be able to work and looking for work. That's just an overall general rule. There are some monetary requirements as far as how much someone would have needed to earn, but those are very low, and the state is pretty much pro-employee, so sometimes they move around the dates of wages they've earned to look and be like, oh, we can qualify them because they earn this there. So that's not nearly as something to focus on as able to work and actively seeking. If they're disabled, that kind of takes away the able to work. If they're a full-time student, that's kind of takes away the ability to actively seek full-time work. All ways to help, kind of prevent paying on unemployment. Compliance with UI integrity. This is fairly new over the last 5 or 6 years or so. With regards to responding to unemployment claims. Previously, employers weren't required to respond to every claim. You could have let someone go through no fault of their own. You know that, they know that. Theoretically, that's an unemployment claim. So you just don't even respond. You save that 5 minutes or whatnot. But over time, because of those improper payments and so forth and fraud that Heidi was speaking about, the overall federal government stepped in and said the states all have to kind of enforce compliance more, enforce employers to respond to every claim regardless. Even if it is a simple lack of work, you need to respond as such. And in order to be compliant, you must fill the 2 criteria, timely and adequate. States give deadlines to respond to the claims. They're fairly quick turnaround. That's why it's great for our customers that utilize the claims management service, Thomas & Company. It's streamlined through their online portal Shield. It gets responded to right away, so that handles the timely part. And then the adequate response, meaning if there is misconduct involved, for instance, you provide the documentation and so forth to kind of prove that in the protest stages and so forth. So if you're timely and adequate, then you're compliant. There's no penalties, nothing's going to happen to you, you're good. But if you're found non-compliant so far, and they can elevate these sorts of punishments, so to speak, if they're finding a lot of non-compliance. What the state does currently, if you're found non-compliant, is you most likely won't get back some charge credits that you would have got back before. Example, someone collects 8 or 9 weeks of unemployment. Then it's determined they should not have collected the unemployment. That employee is notified of that. Theoretically, they need to pay back that 8 or 9 weeks. Understandably, they're not just going to write that full check and pay the state right away. It could take some time. The next time they sell a house or have a huge tax return, something like that, that's when the state could get the money back. And if you've been in compliance the whole time, the state will credit you those funds back. But if you have not been in compliance, that's the type of funds that they will not return back to you. And like I said, furthermore, they could eventually elevate that and actually slap an actual monetary penalty on you. They haven't gotten to that. Hopefully, the amount of people in compliance will keep them from thinking they need to do that. But just something to keep in mind, whether you're with our services or not, responding timely and adequate is very important. Yeah.
Employee was terminated due to poor performance, is that up to EDD to decide, or if they get unemployment? We personally don't contest.
So the question online, if someone, and correct me if I butcher it, if someone is fired for or let go through poor performance, does EDD
Decide if they get the unemployment?
decide if they get the unemployment, or does the organization? Oh, good question. So yeah, regardless of your finance method, whether you're paying the taxes or reimbursing through the trust, for example, the state always decides the initial claim. So that individual will file for unemployment. They may say whatever. They may say, oh, I don't know why I was let go. It was a lack of work. So the state's going to allow that claim right away, especially if the employer hasn't chimed in yet, saying, no, there's misconduct involved, and here's the documentation behind that. So even once all that's provided, the state's still going to make the decision. The employer never has the final say of yes, unemployment, no unemployment. You can give your opinion and your protest and documentation and so forth, but the state is always the one making that decision. And the term that used by the person posing the question, poor performance, that's another thing we'll get to later. That means nothing. You need to have specific documentation of slammed the door and cussed you out or whatever. Like you can't just say they had a bad attitude or poor performance. We'll get there when it comes to documentation. Some fun facts in California. California exempts camp staff from unemployment coverage, provided they are a full-time student. They are employed less than 13 weeks, and the camp operates for less than 7 months a year. So if that criteria is met, their wages should not be included in your quarterly wage reporting to the state, as it's not considered covered employment. Reporting their wages in error, bunching them in with all your other employees' wages, for example, could result in future liability for unemployment. And we'll also see how that works with the state looks at the base year and who's going to pay for a claim. So coding their wages or the funds you pay them properly is important and prevent future unemployment liability. Here's another one. How California handles severance. They don't consider severance payment to be wages either. Same thing, if you give someone a severance, whether it's a lump sum or an agreed amount of time of money over a certain amount of time, you don't want to code them as subject to wages either. You or your payroll company will want to code those separately so they're not included if that person happens to collect unemployment later in your base period of subject wages. Chargeability and liability, who's going to pay and how much may it cost you? Let's talk about how the state determines that. So have they made the minimum wage requirement? We touched on that, not difficult to happen. how much is the claimant eligible to collect and how long, and which employers receive the claim and what type will they receive. And if they're found eligible, how much will each pay? You see the base period there. It's it's complicated, but it's not. So when an individual files for unemployment, what the state does is they'll skip the most recent completed quarter. So if someone files for benefits now, for example, we're in the first quarter of 2026, they will skip the most recent completed quarter. They're not going to look at this first quarter of 2026. They're also not going to look at fourth quarter of 2025. Then they're going to look at the 4 quarters prior to that. And that's what we call the base period. And they're going to look at those 4 quarters to see who paid them wages during that time frame and how much. And that's going to represent the employer or employers that pay for that unemployment claim if you fall in that base year. The same thing with the amount of money they earn from you during that time. If you're the only employer during that time, you're going to pay for the full claim. If maybe you employed them for about 1 quarter of those 4 quarters, and there was another employer that employed them for the other 3 quarters, they'll pay 3/4 of the claim. You'll pay 1/4 of that claim. And the weekly benefit amount that the individual is going to receive also derives from that base period. The amount of wages paid during that time, the state will do their calculation there to determine if they get the max amount as the 450 Heidi touched on. And it doesn't take much to get to that. You only need to earn maybe about $900 a week to qualify for that 450 a week. If you earn $9,000 a week, you're still only going to qualify for that 450 a week because that's the maximum. It's approximately 50% of what you're earning. That's always a good rule of thumb in whatever state you're in. If you happen to move to other states and work for organizations, that's a good rule of thumb there. The maximums that get paid, of course, vary, but it's 450 here in California. So that's also important to know. You can look at your charge reports and see someone pop up collecting benefits. It seems like a long time since they've been here. Why are we paying for any unemployment? You can see why based on this base year. It could take about 1.5 years when you think about it for someone to kind of really fall out of your rearview mirror for the potential of unemployment charges. And when someone files that benefit, you notice here it talked about which employers will receive a claim and what type will they receive. So someone files for benefits. Only the last employer that they just got separated from will receive the last employer claim, which is the one that needs to be responded to. Yes, it was a lack of work. No, there was misconduct involved. They should not receive unemployment, what have you. That last employer is the only one that has a say in working with EDD to determine yes or no on unemployment. All the base period employers don't get to do that. They just get the claim. This is out there pending. If it's approved, you're going to start getting charged. You can't jump in and say, well, we fired them for misconduct. They stole 3 computers. If you're not the last employer, it does not come into play when it comes to the decision by the state. Yeah. So I see the looks on faces. Some people think that doesn't seem fair. Takes me back to 2005 when I first started working for 501, and a gentleman used to do these presentations, and that was in paper, the flip charts and the pen. Yeah. And the first thing he'd start with was a big NF and go around. Anyone know what this stands for? There's all these guesses. No one ever gets it. And not fair. He's all, you'll find out later about what that means. Question. Good question. The question, part-time employees, multiple jobs. The same theory works. If someone files for benefits, there has to have been some loss of employment. So one of those part-time jobs or something would have had to have let them go. So that's what they're going to file on. And then most likely they're going to be possibly allowed benefits in that instance because they've lost some hours. Let's say they were working several hours at 3 different places, but it added up to a decent amount. So in theory, they lost some hours, so there could be a partial claim, so to speak. But having said that, so they're granted benefits. But if the state does, and it's a complicated formula in the back they would do, They would compare what they're still currently earning versus what they would be allowed if they were fully unemployed. And there's some earnings disregards also, but basically they'll compare those two numbers. And if they're still earning, let's say $400, and maybe they would have received $450, they could possibly get $50 a week. But if they're still earning as much or more than they would have got on unemployment, even though they did lose some of their employment, then there's no benefits to be had there, if that makes sense. Yes.
Question,
Mhm.
Is there a minimum part-time hours that they need to do in order to get unemployment?
Not necessarily, but the same thing there. If they're working 30 hours for you and 5 from someone else, and they lose that 5-hour job, when they do that comparison, they're still going to be earning more money than the wages they lost off of that 5 hours. Yes, question.
Well, unemployment for a period of time. I know I've seen people, they gave unemployment for like 7 months, and then how is that possible? Then you got people who only able to do it for 3 months. How does that fixed amount that says you're eligible for 16,000 or you're eligible for 9,000? Where does that come from?
Good question. The question was, yeah, the question was, how is it determined, how long someone can collect, or how long it'll take them to get their $16,000 was the example or whatnot. When someone files a claim and they're granted benefits, the maximum, we touched on the 450 a week, but I forgot to mention the maximum amount of weeks for that claim that you can collect is actually 26 weeks. You do have 1 full year to collect that 26 weeks. So you have 52 weeks to collect that 26 weeks if you happen to hop in and out of collecting on that claim. But for an individual claim, under normal circumstances, the maximum amount of weeks someone could collect is 26 weeks. That's the maximum amount that a reimbursing employer would be responsible for paying on that claim. Example, 450 is the maximum weekly benefit amount if they're granted that. The maximum amount they can collect on that claim is $11,700 in California. Having said that, there are times, with economic situations or disasters or so forth, where the state government or federal government will step in and allow for extensions. The question also mentioned some people collected for a year and a half or a year or whatever. That's happened when there's big recessions or COVID or things of that nature. But in that example, the same thing still holds true. You as the employer would still only be responsible for 26 weeks of that claim. The feds step in, the government steps in and would cover the remainder, whether you're merit rated, paying the taxes, or reimbursing. So yes, some people on the back end, the employees, they don't know the difference. They could care less where the money is coming from, collect several years if the time allows for it, and the government's doing the extensions. But you, the employer, would still, in the long run, only pay for 26 weeks. Hope that answered your question. Any other questions on the base period or how that can work? Yes.
In the 90 days, so the current employer would not get, right? It will be from the top.
Not necessarily. So if you hire someone and you let them go in 60 days, 2 months, you're still going to be the employer that responds to that claim, of course, because they're the last employer. And I'm assuming maybe in that example, you did let them go through no fault of their own. So the state allows them benefits. Yes, when that initial starts paying out, you're not going to pay any benefits because you're not in the base period. The other employers will pay that we're in the base period. Having said that, you do have a spot in their employment history that can pop up in another base period. It would be very minimal because you only paid them for, yeah, yeah, yeah. So a future claim, you could let them go. You could fire them for misconduct, no unemployment. They could go down the street, get a job at Target, lose that through no fault of their own, because maybe they got it for the holiday season and then they don't need them anymore. Let them go, they file. That's going to allow benefits. They're going to look back at the base period. You can pop in there and you may owe 1/4 of their unemployment on that claim. All righty. So that's chargeability and liability and how the state figures it out. And also keep in mind that the not fair part, you could benefit the other way also for a similar situation where maybe you let someone go through no fault of their own, which would be unemployment. And then maybe they got another job and didn't file because they got another job. And then they lost that in 6 months for misconduct, and then they're denied. So it kind of worked both ways, but obviously you only focus on when you think you're getting the short end of the stick. And here's just an example of that base period, how you can apply it to real life and breaking down what employers would pay. You all have it there. Pretty much what I explained, but it gives you a real life example there. Yes, another question.
They don't file unemployment. They get another job, then life happens, it doesn't work out. They file unemployment. Don't they ask you for your job history when you file unemployment? Or they only ask you for your most recent job?
The most recent. The state finds the job history, and that's another thing that leads me to something else I should have mentioned regarding the base period. The state finds the job history through their social security number. And that's the reason behind the base period, because you as an employer every quarter, after that quarter's done, you're submitting a wage report to the state. We paid all these people all these wages. That takes the state a while, let's say about a quarter or so to get that all in. So there's always kind of a lag of having true employment history. If someone filed a claim and then they just looked at that quarter and looked at the previous quarter, they're not going to have the true employment history. So they need that kind of lag to get a true annual 1 year look back. That's the whole reason behind that. The base period part is to let everything keep up the actual 52-week job history along with wages paid. Types of separations. So this 3 buckets, the state will put anyone files for unemployment into one of these 3 buckets. It's either a discharge, typically, and I always say typically, everything can go both ways. Dealing with the state and adjudicators. Discharge, typically, no unemployment. Voluntary, typically, no unemployment. Lack of work, typically, unemployment. Discharge, that can be a violation of policy, gross misconduct, suspensions, mutual agreement, what have you. To get that unemployment claim dropped into the discharge bucket and theoretically not paid, you don't just do that after you've let them go and they file the claim. You need to document throughout, and many of you know, especially on the HR side, throughout their employment, what's going on. Any warnings you've given them, get them in writing, repeated tardies, get those dates in writing and times they came in, things of that nature. Because it's also important that when you do decide to let someone go and you think it should fall into the discharge misconduct field, that the last incident is very important, that it matches with what you're doing. Quick example on that. Someone's late, constantly late for work. You've counseled them. You're like, what's going on? My alarm clock. You bought them an alarm clock. They're still late. What's going on? My tire keeps going flat and I have to pump it up. You bought them new tires for their car. You've done all this, and then finally you're like, all right, the next time you are late, you're gone. You're gonna be terminated. What happens the next day? They come in 2 hours late. What are you gonna do? Yeah, that's my answer. Terminate them. However, what you should do to do the best thing possible unemployment wise is once again actually discuss with them and ask what happened, because what happened that day actually was they were going to be on time for work. They lost control of their car. They were hanging over the bridge, almost fell off. Cops had to come save them. Tow truck saved the car. It's on the news. They're asking the person, what can we do for you? get me to work, I'm going to get fired. So if you would have inquired about all that, that was a new reason, way out of their control. And theoretically, you should have given them another chance based off of that. Because if you didn't, and you didn't even hear it, you're gone because they came in 2 hours late after everything we just talked about. Then they go and file for unemployment, and the state's going to be, well, what happened? Why were you late? And they explain all that. The state's all, oh, then they're going to allow them unemployment, and you're going to be baffled because they were late every day for a year, and then you're still paying for unemployment. The last incident is the most important. And then if you have the last incident on your side, so to speak, all the other documentation prior is just going to solidify getting it dropped into the discharge bucket and denied. Similarly with voluntary resignations and so forth, because an employee can tell you, just moving on, resigning, quitting, whatever, and then go file for unemployment and tell them it was a hostile work environment, such and such was happening. They're going to allow benefits. So you got to do your best part, one, throughout employment, finding out if there is anything going on, and maybe you need to move around hours so they're not associating with another employee that maybe not getting along with them or harassing them. You do what you can to accommodate them within reason, and find that out, because if you have all that documentation also, you can provide that to the state, and then the state's all, oh, they were trying, and then you have a better leg to stand on to get that claim denied. And finally, the lack of work, that's the one we all agree with, why unemployment was created in the beginning. No one has a problem with helping out employees in that situation. If there's just no more work available, or maybe you had budget cuts and had to let go a department or a program, lack of work is pretty much what unemployment's for, and employers don't necessarily challenge those either. Any questions on how to secure these buckets and so forth? We'll go here first and then you. Yeah, go ahead.
On the staff reduction.
Staff reduction.
Sometimes companies pay you 6 months, 8 months, 1 year, 2 year salary, and make you sign, you will not file for any damages.
Good question. He said, so on a staff reduction, sometimes you have them sign, you give them funds or something, 6 months, 8 months, 9 months, that you will not file for unemployment because we're giving you these funds. So two things. Remember before I mentioned that's kind of like a severance. So it doesn't apply to wages. But two, I mean, you can have people sign stuff saying they're not going to file for unemployment, but you shouldn't do that, because you can't have anyone say they're not going to file for unemployment. It means nothing. Anyone could file for unemployment. I'm still fully employed. I can just go file for unemployment if I want to, and see what they do. There's no and then even if they did file and started collecting, that thing you had them sign saying they will not file, that's going to mean nothing in any of the courts. I said a lot of things can go either way. That's not it either way. That's literally means nothing. So you're kind of wasting your time doing that, as far as saying you're not allowed to file for unemployment until 8 months passes or something like that. Yeah. And we had another question back there.
So if you have both discharge and volunteers, they said you have to pick one. And I was curious about that, because someone that would be no show. But that means they also violated policy due to the fact they were on the PIP. So, but when they called us to say, hey, we got this report, when the employee, I see what you're saying, you can't, but they say we were not allowed to with the categories of why they were no longer with their agency. Is that you had to keep going. Have you heard that before?
Not necessarily, but the question in general was whether they were putting it, one was voluntary and one, yeah, voluntary and discharge. And they were a little confused on which one they should put. So kind of they tried to do both, because there was evidence leaning towards either way, so to speak. And they were told you have to pick one, which is true. Kind of judge which one you think it would fit best. And like I said, more so lean towards the last reasoning, the last incident, for whatever reason the separation occurred, whether they derived it or you derived it, and go from there. And that's probably the one that you'll want to use, and then provide the documentation to back that one way or the other. Yes, another question.
It's for, I work at in schools, and so we're offer school breaks.
Uh-huh.
So like winter break, truly staff is hard for hourly staff.
Yeah.
I do believe I got notice for someone that filed for unemployment because of less than or reduced hours.
Uh-huh.
Even though that's part of the calendar. So
Uh-huh.
how would that work?
Yeah, so like I said, anyone can file, and in that instance, you can have the documentation providing, this is known employment, that it was a natural break in there. And sometimes there's even, you may even have proof that they are paid for that, even though they're not getting paid for it, because maybe it's embedded in other pay that they have. So you could probably have that if you have that going on. But moreover, even in that instance, the same thing, if the state does allow them the benefits, the same sort of thing when they look at what they're still earning versus that 2 weeks of the lost wages, so to speak, there may be nothing or close to nothing there as far as benefits going out to them, a couple dollars, or they may even still earn too much. Yes, sir.
The example I had, Cisco does it all the time. They say, you're not letting your job go, it's your option. If you want, there's a package available. So it's not workforce reduction.
Uh-huh.
I mean, it's not that they're letting you go. You volunteer, say, I would like to take this package of 1 year severance package.
Uh-huh.
So it's not unemployed.
Yes, so same thing though. The gentleman mentioned for the folks online, it's not a staff reduction or whatnot, but offering people if they want to take this package, for instance, at 1 year, and they'll give you, that year's pay basically, or maybe something short of that. But in the same thing, signing, since we're still paying you for that year, to not file for unemployment. Same thing, they can file because there's no actual work being offered to them for you. So giving them those packages. Not necessarily. That's one that when the adjudicator is looking at it, they could go either way. So the employee necessarily shouldn't bank on winning, and then but neither should Cisco or that employer either. That is more of a sticky situation. But anytime an employer does do that, they can always assume the worst case could happen, where you gave all that money and you could still pay some unemployment. Yes, another question.
Tell them you're gonna continue to pay them when they're not working, and then those wages are not considered severance.
Yes,
You report to the state, they have to report, they can't file for us.
Yeah,
because they're still being paid.
Yeah.
The wages, you don't say severance, you say, we're gonna continue to pay your salary while you're gone.
Yeah, her question was it not making it severance, saying we're going to still pay your salary while you're gone. So for instance, you could say, this next year you don't need to come in or anything, but we're going to still pay you. And if you're putting it under the subject wages, all you're doing, it does still look like they're your employee. So they can't file, or if they did file, it's going to look like they're still working. They'll be denied. But all you're going to do is delay the inevitable. Once that ends, then they could file, and it looks like they were working that whole time, and then it can pop back in. Yeah, so we'll do one more question, then we got to turn it over to the employment law section. Yes, go for it.
An exemption. We have a job training program in our organization, and or youth that are in that job training program, they're just if we don't report the wages, if there is an exemption through the state, from the manager that was existing. They still go and apply, because if you let them know in orientation, you're not, you don't have the benefits, not taking out from your paycheck and things like that, but they still do it.
Mm-hmm.
You still have to do the work in HR, responding to the claims, right? Like, it's just coming through you guys, helping. And we send letters, we let them know, and then it's just a process. Like, the state, they receive the claim, and their job is to continue the process, right? So we get those, letters anyways.
Yeah, the question she mentioned, a lot of times when you're bringing people on, you're not necessarily having them as employees and paying them subject wages. There's different types of contracts and so forth, the ways you're paying them, but then they'll still file for unemployment, and it does still create a claim that needs to be responded to. And a lot of times in that example, once the state looks into it and sees if it's not necessarily the typical subject wages, then they'll say the employer can win that claim. And I'm assuming you probably experienced that sometimes through our claims management as well. Yeah, but if you had messed up in how you report those wages, you can't fix that. You can fix it after the fact and then moving forward, but it may not help you too much on any monies that have already gone out the door. And I'll be around also after all this to help any more specific questions anyone may have. But I don't want to cut into the gentleman's time for the employment law, which is actually pretty interesting as well. And you guys all have the rest of the slides that we didn't get to, which a lot of it is just some detail on what we did discuss on how to document to get those ways to fall into the bucket, the desirable bucket when the state's adjudicating the claim. Yeah. Yeah. Thank you all for